Good evening, everybody. This is the Speculator at Take Your Profits, and I'm here tonight to go over a little bit of trade psychology and how certain psychological aspects have infiltrated my trading mental state recently. And I just kind of want to make a little video blog in regards to how it's affected my trading. Going into one of my most recent trades here on trade number 79, it was a short on the US dollar Swiss franc market. If I am correct, this particular short was before the recent Swiss government intervention, which saw the increase of dollar strength in a dramatic way in this market. I did not participate in that trade because I didn't have any real signal to get into that trade. However, before that intervention, I did make a trade short entering the market right about here. And if you go back to the post-trade review for trade number 79, you find out that my initial profit targets on this trade missed their pips by missed their profit targets by one pip. The funny thing about missing my profit targets by one pip is that my initial profit targets were not originally intended to be where this initial profit target was set. This initial profit target was set, if I am correct in saying so, about 20 pips above the 618 retracement of the A to D move. Initially, at the beginning of the year, my rules of engagement had dictated that my initial profit targets would be set at, instead of the 618 retracement as is here, they would be set at the 382 retracement. I had moved my original profit target strategy to the 618 based off of an idea that I got from watching another trader, and I did that basically because the feeling I had inside of me, looking back on my decision making in hindsight, I did that because I was greedy, because I'm having the desire of wanting to take larger profits on these moves that I'm taking out of the market when I'm hitting my initial profit targets. Now, that particular so yeah, this is an example of how greed has infiltrated my trading. Now, because I've been able to recognize the fact that I was greedy and not taking initial profit targets out here, which would have netted me a profitable trade on this particular trade instead of a loss before the Swiss government intervened in the markets, carrying this market up an additional 300 points against the position. But before that, the greed is what prevented me from following the original trading strategy I had laid out at the beginning of the year, which served to be a very profitable strategy, which was to set my initial targets at the 382, secondary targets at the 50%, and then I would trail the third target behind the market to try to achieve the 618, if not beyond that, in terms of profit taking was concerned. Now, because I was greedy, I have taken a little bit more losses that I'm used to taking, or that I'm comfortable taking recently. So because of that, we did go back and create a rule of engagement add point that is on the on the video blog portion of the site for the ROE add points, to go back to taking those targets at the levels that were defined and were more successful for me at the beginning of the year. Another Another emotional and psychological situation that occurred actually in the same market, just a little bit later on down the line, was the fear that I experienced, which prevented me from actually executing a trade. And it wasn't fear, but looking back on the situation now, I can definitely say that that fear is what prevented me from executing a trade in this particular systems trading model that I trade. So we had a greedy situation on trade number 79, and then this was a situation that prevented an execution of a trade in the systems trading model in the same market after the Swiss government intervened in the market, causing this run up in price here from 78.50 to 86.14. So imagine that was a huge move. 86.14 to 78.50 that's a 764 pip move. If somebody had the strategy of entering here, I unfortunately had no clear strategy dictating to me that this was a good point to enter. Now, I did, however, after this bull rotation happened in this systems trading model, according to the rules of engagement for this model, I would have had to take a long entry here at this volatility level, in which I did not, because I associated, and this is where my psychology comes into play, because I allowed my brain to associate the fact that in the Japanese yen the Japanese yen market, after any period of substantial government intervention, the price tends to generally reverse back to basically where it came from. And let me show you an example of what I'm talking about. If you can see here, this is the Japanese yen market after the Japanese government intervened. We had about a 250 pip increase in price, as you can see here by this extremely large candle, and then almost immediately the price, typically always in the yen, reverses back to wherever price had initially begun before the intervention. Well, in the Swiss franc market, because I allowed that association of believing that the price would revert back to, I guess, the mean, because I allowed that association to penetrate my mental state, I allowed the fear of losing money to prevent me from taking this long entry here. And if we follow the market down, or up in this case, we can see that this trade turned out to turn, look at this, it's just going up and up, and it's consolidated. But at the end of the day, we had a pretty good, from 85.62 to 88.97, 89, almost 400 points, almost 400 pips I missed out on this systems trading model, which would have been a BMR1 entry after the first strike bull rotation that occurred here at this point in time. Because fear infiltrated my decision-making process and my mental state, I missed out on that trade. So there's an example of greed. There's an example of fear. Ignorance, okay? I did have a little brush of ignorance here trading this. Look at these three examples came from pretty much the same market across a couple different trading opportunities. But going back to let's see. You know what? It actually also happened in the Canadian dollar. And the ignorance actually stems from my lack of understanding the amount of commission I'd be paying at this particular brokerage that I was working with in this account. Because as it stands, this brokerage that I use trading this ninja trading platform here charges me a higher commission that I am used to, and I think the spread on this Canadian dollar market was somewhere about 4 or 5 pips, which is astronomical, but you know, that's neither here nor there, you know, because it's my own fault for not being fully aware of the terms of my agreement with this broker. Okay, so in this case, my own ignorance cost me the profit from this particular trade, which was signaled here, which was a BMR, which could have been a potential BMR entry for this systems trading model, which I trade also. But it cost me this entry on this candle. My orders were set here at 95.81. The market only pressed down to 95.79, 2 pip difference. So that means my orders were not sufficiently entered to allow for the spread that my broker requires to allow me to enter into the markets. So this happened at about 5 a.m., this signal candle, and you know, I was therefore not awake, I was sleeping. So as the market turned, once I woke up at 8 a.m., I realized that my orders were not placed. I hadn't realized at that point in time that my orders weren't placed because the spread was wider than I had anticipated. So because of that, I never took the opportunity of entering the order regardless of the spread, and I therefore missed out on a pretty substantial move, which as of this point right here, just showing on the screen, is a move of from 95.80 to 99.73, which is about 300 pips. So yeah, that was a 300 pip move roughly that I missed out on because I was ignorant of the spread being charged, and I was being nitpicky with, you know, the 2 or 3 pips it was going to cost me. Even if, I mean, come on, even if it cost me even if it cost me 30 pips to enter this market, you know, it's ridiculous to exchange 30 pips for entering the market for the 300 pips that I could have potentially made. So, you know, again, that's a psychological error on my part, based on ignorance and based on really being, you know, it's like I'm penny pinching the market here. You know, it's like nickel and diming the market. There's no need to nickel and dime the market. You know, that's why I do make an effort of, you know, front running my orders to account for any spreads that the brokers might charge. I don't really keep too many tabs on how many pips they charge, but you know, this is an experience that is teaching me that this particular brokerage that I trade with on this platform charges a higher fee that I'm used to. So, you know, I just got to make sure that in the future I account for those larger spreads so that way I can participate in these moves that are being signaled by this particular trend following system that I do trade. So going into that, you know, those were examples of greed, fear, ignorance. You know, the last emotion that I'd like to get rid of would be the hope. Now, I do a pretty good job of not hoping for too much because I'm not, you know, expecting anything other than what my own hard work is going to garner for me. So at the end of the day, this is what I'm here for, is to analyze my psychology. So thanks for listening. Don't forget, take your profits. And while you're at it, take your profits. great night. Have a good night.